We knew that last week was going to be an interesting one to see how the markets respond to the Fed's meeting. Well, we got our response. We saw what happened to rates. We're going to talk about that here real quickly. This is Ryan Hillard with the Ford Mortgage Group, and this is the market rate forecast for the week of September 27th, 2021. So to cut to the chase, after the Fed met last week, after they made their announcement, and they said that even though they have been keeping rates low through the purchase of mortgage bonds, which is called quantitative easing, if you've heard that term, they will be reducing those bond purchases, and they're expected to do so after the November meeting. So we will start seeing rates go up a little bit more. And what was the reaction to that initially? Well, right away there wasn't a huge reaction until it was in the overnight trading. Once that happened, the next day, that's when we really saw rates jump. And rates had jumped anywhere between an eighth to 3/8 depending on the lender. Without going into too much detail on that and how that can happen, is just to say that different lenders are going to take different risks. They're going to build in different margins. And so that's why it's beneficial for me as a mortgage broker, where there's 40 different lenders that I work with or have access to, and I can go out and always make sure that we're seeing who will continue to have the best rates for you or a particular borrower or specific situation. So what's going on this week? Well, this is going to be a pretty tough week to forecast where rates are headed, just because we did see a little bit of a jump last week, and anytime there's a lot of volatility in the market, it's really just trying to find its new footing and what are its new boundaries. It doesn't really know. It's just kind of out there wandering around a little bit and trying to figure out what that safety comfort zone is. So as that continues to happen, there will be some more volatility. I will always say that rates are going to go up faster than they come back down. So if you are out there and thinking about either refinancing or getting pre-approved and looking, it's still a really good time to do so. Rates are still really low despite them having gone up, but the forecast over the longer term is for rates to continue to move up. So it's also a good time to act. In terms of what's affecting rates this week, there is a lot of economic data for housing, and we could see some day-to-day movements that are caused by a reaction to different reports, including inflation data at the end of the week. We've talked about inflation before. We know that it's the enemy of rates, so more inflation, more likely there is for rates to increase. And then just to recap in terms of the Fed stimulus, even though they will begin to taper, they're not going to let go of all of that at once. So going forward, the Fed will continue to buy treasuries and mortgage bonds, which will continue to help keep rates low. As rates go up, they will continue to creep up, not jump up. So I hope that's helpful. This is Ryan Hillard with the Ford Mortgage Group. If you have any questions on this or anything else, please feel free to reach out, and I will look forward to connecting with you then.